Hi there, Bob Shaw at Paradise Real Estate. It is Thursday, November 4th, and I thought I would share with you what I could on the local and national real estate markets. So here in northern Palm Beach County, we still have a significant shortage of available homes for sale. I recently took a look at active listings over the last 30 days in Juno Beach, Jupiter, and Tequesta. And we are down 65% compared to the same 30 days last year. Sales-wise, homes are selling very quickly if they are in any way reasonably priced, still have multiple offer scenarios ongoing, and prices continue to appreciate. As we've mentioned and as you've heard, price appreciation over the last 12 to 18 months is 20 to 30%. So when I get the question, is the market slowing? Well, it's slower than it was this time last year. But last year at this time was an unusual anomaly compared to regular real estate seasonal activity. To give you a more broader perspective and to give you a picture as to where we are activity-wise and maybe a window into the future, I want to share with you some slides from the real estate group Keeping Current Matters. So the first slide is a chart compiled by Showing Time, which logs showings by realtors, and it goes back 4 years, logging activity, showing activity in September. And what you'll see is that while we are down slightly from last September, we are well above the prior 3 years of September showings. The next slide is an example of how national headlines most often scare as opposed to inform the viewer. What this slide will show you is that while foreclosure starts in August were up slightly compared to last year, they are significantly lower than the prior year. Something to note from the last slide regarding foreclosures is that last year there was a forbearance program in place where it prohibited most foreclosures from being initiated. So you would think there'd be a pent-up supply of foreclosures in the pipeline, which really hasn't been realized. Getting into where values and prices will be in the future, what we do see is that the level of appreciation rising or accelerating has abated somewhat, where it's leveled off, but we're still appreciating. Most prognosticators think that the level of appreciation will be lower than it has in the recent past, obviously. And this next chart will lay out where some of these predictions lie. So if the estimation of home price performance from the last chart holds true, we're going to see levels of appreciation revert back to their typical 3 to 4%, maybe 5% range that we've seen in prior years prior to COVID. So if you're a buyer and this estimated home price performance holds true in the future, where we see a more regular 3 to 5% level of appreciation, you should take some comfort in that if you were to buy now, you're not buying at the top of the market, you're buying a home that will appreciate in value and that you'll be able to grow equity. Conversely, if you're thinking of selling, the levels of equity in homes today is unparalleled. The average homeowner who holds a mortgage has over $200,000 in equity in their home. For more detailed analysis of the growth in equity and how it's skyrocketed in the last year, take a look at this next chart from Keeping Current Matters. Finally, if you're thinking of selling or buying, the headline of rising interest rates must also be put into some perspective. The thought is that they will go up incrementally up to maybe 4%. But if you take a look at the average interest rate on a 30-year fixed mortgage, that's 3.75, 3.8 over the last 6 years. So we're going to be right at where we have been for a long period of time. So there is no reason to panic whatsoever. That's about it for today. I don't want to keep it much longer because I've gone on way too long. But if you have any questions or concerns, always feel free to call 561-440-4024. Speak to you soon. Bye-bye.